want to just welcome everybody for being here. This is just going to be a crypto for beginners and trading basics presentation. I do expect a lot of people to watch this recording, just, posting it in the group afterwards. So hopefully from there, we'll get a lot more questions and things like that, because we do have a lot of new people in the group. And I really want to target this audience and help them get the right information. So if some of you are new, that's great. Some of you, maybe you've been in crypto for a while, or maybe want to learn trading. I also think this presentation will be great for you as well. So yeah, let's go ahead and get started. All right, so this is a quick introduction. I know many of you maybe don't know who I am particularly, but I am, of course, the women's admin for the Crypto Coin Trader group. I am from Louisiana. I've been in crypto since 2016, just kind of randomly caught my attention. I've always been interested in technology and healthcare, and a football player told me about it. So I went look into Ethereum, first of all, in 2016, and just really got interested in learning a lot more about the technology and just trying to figure out what is it going to change. And so, of course, my knowledge for crypto evolved. But ever since 2016, I really was interested and wanted to learn more and just kind of constantly learning, as we go forward. There's so many new things happening in the space. I think it's really good to know where to get good information from and then how to vet that information out. So hopefully some of that information will be covered today. But I am married. I have 2 young kids. I do a lot in the crypto space. So currently I'm an advisor and an ambassador for a few different companies. I'm also a crypto coach. I work with a company as well, as part of the Blockchain Trading Academy, all really focused around education. I realize that that's the biggest gap in cryptocurrency, is that the lack of information or the lack of respectable information. It's really hard to find. And so that's kind of where I find my niche. So I really am passionate about educating anyone to come into the space. Also learning new things, like I said, myself as well. Also a crypto trader. So I've been trading crypto for about 5 years now. Prior to trading crypto, I did trade a little bit of Forex, did that for about 1.5 years. Didn't really like it as much. Didn't have as much success with that as well. And that was kind of where I started learning. So now I am trading cryptocurrency, and I've been trading crypto for a while now. So, finding kind of my strategy and trying to adopt to that. And of course, constantly adjusting it if things need to be changed around. In addition to that, I am a full-time registered nurse. I still work full-time as a nurse. Love what I do. I don't work in the office or with patient care anymore. I do more of the clinical system. So kind of, that kind of, I guess, combines my interest in technology along with blockchain and cryptocurrency. All right, so this is just kind of the 2 basic topics we'll touch on today. Crypto 101, so we'll go over some of those basics. That's going to be where a lot of new people might get a lot of information. I will say we probably have at least 80 to 90% of new people coming into the group, because I can see when they put questions in. And so we get almost or over 100 requests into the group a day in the women's group alone. In addition to that, I do moderate the CCT group, which is the Crypto Coin Trader group. That one we had like 140,000 people. So that one's a little bit harder to manage. But I mean, we have an influx of people coming in, and I think majority of them are new. So that's why it's really good to kind of get the information concise, in something like this. So we'll also start. So the second section of the presentation is going to be trading basics. And so that's where we'll really touch on what are some of the basic trading terms? What is crypto trading? What are some things to look at? What is a basic candlestick? I mean, I'm keeping it very, very simple. So you may already be a trader. You may already have some of that knowledge, but it might still be good to kind of see what is considered basic. And then the great thing is that Gladys, who's actually one of our awesome moderators, I have a great team of moderators with Crypto Coin Trader Women's, but she actually is going to be doing a technical analysis basics class on Thursday. So that one's going to be recorded as well, and it'll be the same time. So I'm super excited about that. And she's on today with us right now too. All right, so of course, basic information, my disclaimer, this presentation is just for educational purposes only. I am not a financial advisor, so just kind of giving you information about that before I start. All right, so basics. So why is it important to us? Okay, why is crypto important to us? And so I really like people to understand, I guess for me, it took a while to evolve. I didn't really understand the vision or the history of money or what type of current debt we're in. I'm living in the United States. I know people in our group are from all over the world. But, I didn't really understand that. And so it took me a while to understand what is the debt? How big is the problem? How can we get a hedge over inflation? So for me and for my kids who are young, I wanted to know how I can put money into assets that are not susceptible to inflation. We see the price of things going up and we see the problem not getting fixed. And so when you understand a little bit about blockchain and about cryptocurrency and why it's the future and why there's going to be a shift, or there's already starting to be that shift, it gets to be a lot clearer for me. So when we say do education, it's not so much, oh yeah, there's this crypto thing, you can make money. It's not about that. It's a lot bigger than that. It's why do we need it? How is the evolution of money happening? What is fractional reserve banking? What does cryptocurrency do, and what does it solve right now? And it really was not designed to make people rich. Of course, being an early adopter, which I still think we are early, can help you accumulate wealth over time. But it's all about getting the right strategy, the right mindset, understanding the space, because it is still young and it's forever changing. So I think for me, that's important. And then to understand concepts like, my kids are young. I don't think they ever going to really know in 20 years what cash was. I feel like everything's going digital. And so we have this shift happening, just like the internet happened in 1994. It's like the same type of things happening. And it's just cool to be a part of it and great to learn about it, while it's still a new technology. And then I just say double up on education. So we all here in this space to learn. There's a lot of fluff information. There's a lot of fake information. There's just a lot of information in general. So knowing where to get those sources, what to really look at, who can really help you, like those are the things you have to figure out. And when you really don't know where to start. So hopefully at the end of this presentation, I can give you some resources and some places, maybe things that I use that is super helpful. And as I go through the presentation, guys, like I said, feel free to pop anything in the chat. I have a few people watching it for me. Or you feel free to unmute yourself and ask me. And then, like I said, before I go to the trading section, I'll definitely open it up for questions. And honestly, there's so much going on. Like you guys probably seen in the news, institutional investors are coming in. We have PayPal now and the Cash App and Apple Pay that's incorporating the use to buy and use crypto. I mean, that's a big deal. Non-fungible tokens, that's a big deal. We have all these things about Cardano doing things with the Ethiopian government to create blockchain to be able to track student performances. And I mean, so these are really real world problems that are getting solved by the blockchain. And I think that's the most incredible thing, is to kind of see that shift and see the purpose of cryptocurrency is different for every country and to every person. But all in all, what it's trying to solve is bigger than us, so that's kind of the cool thing about it. So I just kind of wanted to ask some pondering questions. I know being in the education space for crypto, I get a lot of these questions a lot. How do I even buy it? What's a good wallet? How do I set it up? What's a good price to buy Bitcoin? Can I predict that? Of course not. But obviously we had a dip. Anytime the market dips, it really is a good opportunity to buy for anyone who's new. But we'll talk a little bit about that. What is the right altcoin to buy? So I have actually some slides on how to look at different projects. How can you vet it out? How can you figure out what to maybe look at that's going to give you not really an edge, but give you some information and education before you go and make any type of investment? And then what happens if I buy and then the market crashes? What happens if that happens, or what's considered a market crash? So those are just a few things we'll talk about. All right, so the first thing is, what is blockchain? So I know a lot of people, if you never heard of it, to me, it's going to be a huge shift. It's going to be bigger or just as big as the internet. And the easy way I can say it is that the internet really gave us information, but the blockchain is going to give us data and security. And so what I mean by that is that the blockchain exists it's a distributed public ledger, so anybody can view it. So similar to the way you can view a bank ledger, that's how the blockchain works. It does consist of a network of computer nodes, and it can collectively validates and maintain a growing list of transactions. So as things happen on the blockchain, you can't erase it, you can't manipulate it. It's there forever, it exists forever. There's different block explorers and things on the internet. You can go and look at transactions, but the beauty of it is it's data and it cannot be manipulated. Anybody can get a copy of it and anybody can trace the path of it, so that's pretty powerful. I do want to mention though, it's not linked to real life identities. So when we talk about private keys and public keys and me having a digital wallet, it doesn't necessarily mean it's tied to me as Chelsea, but I literally have this string of numbers and letters, and that's how it associates to me. So we'll get into that in a second, but just so everybody understands what is blockchain. It's really important to get that concept. Now, what are some big things I think I see, as far as blockchain disrupting technology? And so, I mean, these are just a few that I pulled out. Obviously, almost every single source or different industry, I can really see it making its way. It's already has. But just for me, these are just a few that I pulled out. So the first one was banking. And so it disrupts the whole commercial banking system, providing a peer-to-peer payment system. And this is super, super secure, and it has very low fees. So look at the current banking system now. Also with blockchain, there's no need for a central authority. That's another big deal as well. Cybersecurity. So cyber attacks are a huge threat to our digital world. I mean, we hear about it all the time. So the blockchain can help, with some of that data and not give authorized access, or only give authorized access to certain people, and it eliminates the tampering of things. So that's a big deal. Supply chain management. Blockchain's already doing a lot. There's a few coins. I know VeChain was doing some pilots with Walmart, and then maybe also doing some things as well with the COVID vaccination, tracking it on a supply chain. But blockchain in general can trace all the steps of anything happening through supply chain. So let's say you at a restaurant, you place an order for some food, or you have that food delivered and then you get sick from it. Maybe you get food poisoning. Well, you contact the owner of the company. Well, technically through the blockchain, they can actually figure out where was that true source, what went wrong, because it's all on the blockchain, it's all data. So that's kind of cool. Obviously healthcare, I'm super passionate about it, just being a nurse, but healthcare with medical data, the blockchain can eliminate the need for a central authority and give us access to the data we need, all in all, with providing some security measures as well. So keeping those medical files personal, which is super important, and all that can be done on the blockchain. And then the last thing is just, the government as well, helping prevent some of this voter fraud and all that. If all this data is on the blockchain, that can actually be a big piece of it as well. So just a lot of different industries. Like I said, there's too many to name, but just start researching that. If that's something that interests you, you can start looking into blockchain and medical, or blockchain and, supply chain management, or any industry that maybe you in, and just see what type of research and information's out there. All right, so what is cryptocurrency now? So cryptocurrency is really that form of digital money. It uses that encryption that I just talked about on the blockchain to verify transactions between peers on that distributed ledger. So like I said, it is decentralized, which means I don't have to know you to send something to you and to feel like the transaction actually went through. So let's say I send money to Jennifer. I see she's on the call. Let's say she has a digital wallet. I send her some Bitcoin. I don't have to know who she is. I don't have to know if she's going to tell me if she got it or not. If it's sent on the blockchain and it came from my digital wallet to hers, all of that confirmation is going to happen on the blockchain, and anybody can view it. So that's the power of it. You don't have to know someone else to safely transfer money. Also, it allows, like I said, the two unknown people to do this. You don't have to rely on the bank. You don't have to rely on government. You can do this on your own. Also, like I said, the hedge over inflation. I know I spoke about that earlier, but just to think for a second, you don't really need that third party. And what we find is that history shows that as people get money and power, they become corrupt over a certain amount of time, right? I don't care who you are. But what blockchain and what crypto does is it literally puts the power in the people, and it's something that can't be manipulated, and I guess for me, it's like, if I hold my money in a bank, I feel like it's losing value over time. My purchasing power is going down. And so, what cryptocurrency creates is for you to be able to be a part of that shift and to solve against something that's going against debt and inflation and things like that. So that's what my good advice would be. Early on in crypto, I didn't really get the whole history of money and why it mattered. But it's kind of important. You have to understand what cryptocurrency is doing and why it's, a big deal. And this slide that I have, I'm not going to go through every single aspect, but I thought it's a really good comparison for you to be able to see, what is the difference between cryptocurrency and fiat. And so fiat is basically like US dollars, the euro, the peso, any type of your currency's country's currency, that's what's referred to as fiat. So you can just see the comparison, like look at it across the board. Crypto created by computers, fiat's issued by the government. Crypto has a limited supply, which I'll talk about that. Fiat, it's an unlimited supply. It can be produced by the government whenever necessary. Crypto is more of a digital way, fiat's a physical way. So like I said, it's really eye-opening to kind of see. And then looking at transactions down here for that peer-to-peer, cryptocurrency is peer-to-peer, but then fiat money, let's say you have a family member living in a different country, it could take 2 or 3 business days for them to actually get that money you send them, not to mention all the fees and things like that that's going to be associated. So cryptocurrency is borderless, meaning you can send it to someone else anywhere in the world. And what it's worth here, it's worth the same in Venezuela, in China, in Australia, doesn't matter where you're at in the world. So that's another really good feature of cryptocurrency and Bitcoin. Okay, so the biggest and the first was Bitcoin. And so I just kind of wanted to touch on this one. It was successfully introduced in 2009 by Satoshi Nakamoto. We don't know who he is or what he is or if it's a he. It could be a group of people, but basically the concept is that he aimed to take out third parties from transactions, mainly just doing business or interactions or deals through peer-to-peer and looking at a cashless system, an electronic cashless system. And so he wrote a lot about this in the white paper. And so the best I can say as well is if you're new to cryptocurrency and you never saw, or even if you've been in it for a while, because it took me a while to go back and look at it, but I do highly suggest you go read that Bitcoin white paper. I actually prefer not to read it. So I looked it up on YouTube. There's a ton of different videos. There's some that actually break it down. So yes, I highly encourage anybody new to crypto or Bitcoin or anything to go and read or listen to the Bitcoin white paper. But what happens is it uses something called proof of work. So this is where miners lend their computing power and they solve all these mathematical equations. And as a reward for solving that, they actually get a part of a Bitcoin or a part of, whatever block of Bitcoin that produced. And so in essence, in a simple term, that's how mining works. And that's why you hear about, Bitcoin mining and certain coins that use proof of work utilize mining. So of course we have proof of stake. We have a ton of different ones now, but Bitcoin does use proof of work. And so the 5 big things are the big takeaways of Bitcoin that I want to mention is first, like I said, it's decentralized. So you don't have to have a central authority. It's transparent. So that means it's open source. So if anybody wants to see or take a closer look at the coding or see how it works, you can actually go to that and look at it. Privacy. So anyone can remain anonymous. Like I said, it doesn't really associate me with my wallet. So you still get to remain private. Fast global transactions. So it's borderless. So that means I can send it to anywhere in the world. And, looking at minimal fees compared to fiat currency. And then the last thing is disinflation and complete ownership and control of your own money. So what I mean by that is, it's not, there's a certain amount of it. And so you actually get to still control that as well. So unlike traditional money that can just continue to get printed, Bitcoin is hard coded to where it has an absolute maximum. And so we'll talk about that in a second. All right, so this takes me to a little short 1-minute video. I think it's a good little intro, kind of breaks up, I guess, the presentation too. So I'll just play this real quick for everybody and then we'll continue on.
What is Bitcoin? Bitcoin is the first decentralized digital currency. Bitcoins are digital coins you can send through the internet. Compared to other alternatives, Bitcoins have a number of advantages. Bitcoins are transferred directly from person to person via the net, without going through a bank or clearinghouse. This means that the fees are much lower, you can use them in every country, your account cannot be frozen, and there are no prerequisites or arbitrary limits. Let's look at how it works. Bitcoins are generated all over the internet by anybody running a free application called a Bitcoin miner. Mining requires a certain amount of work for each block of coins. This amount is automatically adjusted by the network such that Bitcoins are always created at a predictable and limited rate. Your Bitcoins are stored in your digital wallet, which might look familiar if you use online banking. When you transfer Bitcoins, an electronic signature is added. After a few minutes, the transaction is verified by a miner and permanently and anonymously stored in the network. The Bitcoin software is completely open source and anybody can review the code. Bitcoin is changing finance the same way the web changed publishing. When everyone has access to a global market, great ideas flourish. Let's look at some examples of how Bitcoins are already used today. You can purchase video games, gifts, books, servers, and alpaca socks. Several currency exchanges exist where you can trade your Bitcoins for dollars, euros, and more. Bitcoins are a great way for small businesses and freelancers to get noticed. It doesn't cost anything to start accepting them, there are no chargebacks or fees, and you'll get additional business from the Bitcoin economy. For your first Bitcoins and more information, visit weusecoins.com.
All right, so that's just a quick little video that I have. And I do want to mention too to everyone that I do have this whole slide deck, the whole presentation at the end of this. I'll send y'all my website where I have the whole slide deck there. So anybody, actually I'll put it in the chat right now if anybody wants to see it. So yeah, so that's available for you guys to kind of look back and see as well on my website. All right, so we kind of get to the first little question that I have for the audience, just to kind of make it a little engaging. I want someone, if y'all don't mind, just either unmute or put it in the chat if you know what the total supply of Bitcoin is. Winner wins a virtual prize. Now, does anybody know? Anybody on the call? All right, perfect. I see Sarah got it. Cool, cool. Yep. All right. So yes, there is going to be 21 million Bitcoins that's ever going to be produced. And so this is why that big takeaway factor of, you know, you can continue to print US dollars or any type of other currency, but with Bitcoin, you literally have a finite supply, meaning that's 21 million. That's all there's ever going to be. It's hard coded. Actually, the last one to be mined will be in the year 2140. So I doubt any of us will still be around, but maybe. But that's basically when the last one's going to be mined. So currently looking at the supply, these are just some roundabout statistics. There's about 3.5 million of them left on the exchange. There's 2 to 3 million left to be mined. Obviously, some are lost, but the majority of Bitcoin's being held by people and institutions. So people really are using it as a store of value. I know it's been referred to as digital gold, different things like that, but it's not so much, at least here in this country, used to be able to do a lot of transactional things. It's mostly used as a store of value. And then the smallest unit of Bitcoin is called a Satoshi. And so obviously it got its name from Satoshi Nakamoto, who we kind of just went over. He's the one that invented the code or the white paper for Bitcoin, but it's the smallest unit. So it's equivalent to the way dollars or cents work for dollars. So with a Bitcoin, the Satoshi's equivalent, one Bitcoin's equivalent to 100 million of them. So you can figure out the price of Bitcoin and then you can convert it to the Satoshi value. And obviously on the internet, there's tons of different, let's see, I have a few people in the waiting room. There's tons of different, I need to turn that off. Sorry, guys. I had a few people in the waiting room waiting to get in. Okay, yeah, so there's tons of different conversions that you can do with any cryptocurrency. So if you just type in Bitcoin converter, you can type in your current currency and how much it would be worth in Ethereum or Bitcoin or any other currency that you're curious to convert to. So pretty neat. All right, so the next section is going to be how to buy, store, send, and secure your crypto. So this is super important. Obviously, one thing is to purchase it and to get it, but then the most important part is to learn how to you actually secure it and protect it. So the first thing I want to talk about is the on-ramp. And so when I say on-ramp, I mean, how are you going to go from your fiat currency to cryptocurrency? Because not every exchange supports that. It's kind of different steps, and I'll kind of go over it. But whether you decide to trade or if you just want to invest in cryptocurrency, you'll first need to start off buying Bitcoin or any other coin that's supported on that onboarding ramp. So you can buy it on exchange platforms. You can buy it offline. I know some local areas have it. You can buy it through a broker. They have Bitcoin ATMs. A lot of the time, I know where I live, we have them in gas stations and stuff. And then also I'll tell people you can get free Satoshis. So if you just download an app, there's two of them that I have. It's called Fold and called Lolly. And just by getting cash back by spending money at different stores, you actually earn back in Satoshi. So I know, like, I booked flights the other day through Priceline and got 5% back on, worth of Bitcoin. So just another cool way where you don't actually have to start investing. If you're new, you want to kind of understand how it works first. I do suggest getting those two apps. They're pretty cool. And so cryptocurrency exchange steps. And so not every currency or not every exchange supports you to get every single currency out there. And so there's two different steps that most people have to go depending on what you want to do. So the first one is step one. And so these are your big exchanges or your onboarding ramps like Coinbase, like Voyager, like crypto.com. I know those are the popular ones in my country. Maybe the Cash App or PayPal and Robinhood, which I don't recommend those last two, just simply because you can't send that money out. You can't send that Bitcoin out. You would have to liquidate that position before you can send it anywhere. So that's why I'm really hesitant. It's not saying it's not good, it's just you can't actually get it out of PayPal and Robinhood right now. But aside from that, so there's a lot of these bigger exchanges where you can purchase crypto, and this converts your fiat money to your base currency. A lot of these accepts fiat. So of course you'll have to go through a process. It is more regulated. So you have to upload your license and show KYC, which is know your customer. So that way you can actually get into that exchange and start purchasing your first Bitcoin or Ethereum or whatever it is you may want. Assuming that you are wanting to get other altcoins or get into DeFi or get into Binance or Bittrex or these other exchanges that may not support an on-ramp, meaning you have to actually have Bitcoin or just crypto there, that's where the step two comes in. So I hope that makes sense, because step two is really more supported for the for other exchanges. It's a little less regulated. It has a lot more coins there, but you're not going to be able to go straight from your bank account to that exchange. So did somebody have a question? All right. Okay, so that's kind of the biggest difference. And so some examples of step two exchanges might be like KuCoin, Binance, Bittrex. It just depends on some of those that are not supported with fiat on ramps. All right, so let's say you're ready to purchase your first crypto. This is just some basic steps of things that you have to do. You know, expect to know that whenever you get into an exchange, let's say I get Coinbase on my phone and I want to purchase my first crypto, I'm going to have to complete identity requirements. I'm going to have to upload my license. I may have to hold a piece of paper with the date on it and the name of the exchange. All of this is so that way it verifies who you are before you get approval to be able to purchase or link your bank account. The next step usually is going to be that 2FA. So anytime you have 2FA, which is two-factor authentication, it's highly encouraged. If not, in my opinion, it's a must, but you have to put that on. This is an extra layer of security. And so you download an authenticator app like Google Authenticator. There's a few different ones out there, but always activate your 2FA. This is just another layer of security for you and for that exchange account to prevent anything from happening to it. Once you do that, then you're ready to purchase your Bitcoin. You may have to link your bank account or debit card or wire transfer, whatever method you want. But once you do that, you're ready to purchase it. And then once you verify your purchase has arrived, just kind of monitor it. Look at the different price fluctuations, learn a little bit about it, understand why it's going up and down. Actually, before you actually make any investment, you should know, or at least be able to explain it to your grandma. That's what I tell people. Explain it to someone that you can understand in simple terms, and only invest where your knowledge level is. That's kind of the two best pieces of information that I give people when it comes to investing into crypto. And so here's just the basics of how it works. So let's say I download a wallet. Let's say I just got Coinbase. Y'all just saw the steps I would have went through to set it up. Let's say I have a wallet. I have it on my cell phone. It's going to give me a wallet address. It's going to generate the specific code. And so let's say I want to send Bitcoin to, let's say, one of my friends or someone, maybe I don't even know them. I can actually pay them, but they would go to their digital wallet. They would click receive. I would type in or paste in or scan the QR code of their digital address for Bitcoin or whatever currency I'm wanting to send them. And then I would type the dollar amount. It would convert it to Bitcoin, and then I would hit send. And then obviously I would wait for a few confirmations, make sure that it actually went through, because everything's on the blockchain. Remember, we can go back and view that transaction at any time and see how many confirmations it took and how long it took and all that information. So in simple terms, that's how it works. Another rule of thumb that I always tell people, anytime you're going from any wallet or any exchange to exchange or any type of transaction, really, once you first invest, do a small amount first. So let's say I want to move some of my coins to Exodus or to Binance or to Bittrex or anywhere. until you get used to how to do it, until you super sure if you're new to crypto, do like $5 worth, do a small amount, make sure you send it over, verify that transaction, make sure you got it on the receiving platform, and then, you can proceed to do the bigger transaction. So that's just a good rule of thumb as well. I know I've learned the hard way early on. So I wish someone would have told me to do that. But anyway, that's just good until you get kind of used to doing these transactions. All right, so the next thing I have is wallets, and I'm kind of go a little faster. I know I have probably 30 minutes left, and I have the whole trading basics section coming up. So when it comes to wallets, owning your private keys gives you all that power and control, and so you kind of have to choose, and you have to understand what are the big different types of wallets, and why does it matter? With so many different ones out there, it's really hard, especially for new people. I know for me, I've been in it for a while, to understand what is a hot wallet, what's a cold wallet, what they have wallets now that are on titanium plates, they have paper wallets. I mean, there's just a huge ton of them, right? So just in simple terms, a hot wallet is an online wallet. So this is kind of meaning it's connected to the internet, it's highly accessible. So depending on the frequency of use and how quick you want to use those funds, or maybe it's in an exchange account, that's considered a hot wallet. So that means you leaving your crypto assets on the exchange or on the platform, but because it's connected to the internet, it's going to be a little bit more vulnerable than if it were in a cold storage or cold wallet offline. So that's the simplest way. Not to say I wouldn't suggest holding it that way. I'm not suggesting anything. Ideally, you want majority of your long-term assets offline, meaning on on a Trezor or a Ledger or something on a hardware wallet. That's for long-term. But let's say you're actively trading, or maybe you feel pretty secure with a hot wallet. Just know that because it's connected to the internet, it's a little bit more vulnerable than a cold wallet. So these are the examples I have down here: exchanges, if they online, or any type of software wallets too. So that's like Exodus. I know there's a few different ones out there, but it still means it's connected to the internet. Then the next type is called the cold wallet. So these are less accessible. It's not connected to the internet. It's highly secure. And some examples is hardware wallets. So like I mentioned, Trezor and Ledger is the two most popular ones. Also a paper wallet, and then these titanium plates. You can actually get titanium plates with your seed phrase or private key engraved in it. So that's another example of a cold wallet. So it literally does not exist on the internet. So that's the most secure, one of the most secure mechanisms for majority of people in crypto. I mean, obviously there's multi-sig, there's a bunch of more technical ways, but for majority, this is sufficient. And so these are just what you consider: frequency of use, ease of use, and then how anonymous are you whenever you're putting your crypto on these wallets. So just different things to think about. And then the main reason why people prefer to use their own wallet is to I can't say the word. Mitigate the counterparty risk. And so I mean that because, if I don't want to put the trust in someone else or a different exchange or a different company, I don't care who it is, if it's not my private keys, then it's not my coins, right? And so you probably heard that in crypto, not your keys, not your coins, and that's basically what it means. So to eliminate all the risks or most of the risks, that means you have to hold those private keys, which means that it does not exist in a hot wallet, meaning it's not on the internet. So, that risk does kind of intimidate some people. And like I kind of explained in Miami when I gave my talk, is that, ever since we born, we feel like we're born in this bubble, like we have bank accounts, we have all these insurances that protect us. We have car insurance, health insurance, vision insurance, a layer of security where we don't really have to know because we have a fallback if something happens. But the reality is with crypto, and with protecting some of these assets, it's really up to us. If we want to be sovereign and we want to own our own, money and have our own power and all that, it does come with responsibility. And so for some people, it is a little intimidating, but I just say with education, a lot of that does go away. So just to get educated and to learn and to know what you're doing really makes a difference for sure. And so this is just a simple how to send Bitcoin. I just wanted to show everyone what you see this long. It's in white. I know it's kind of hard to see, but the letters and numbers, that's what a receiving address could look like. And so if you want someone to send you Bitcoin, you would just share this address with them or share the QR code. And that's kind of how that would actually happen. So just kind of wanted to point that out, what it actually looks like. My tips also noted here: first time transfer, send a small amount, confirm, and then you can send the rest. And so this takes us to public and private keys. And so this is probably, if you don't get anything out from this presentation, this is the one thing I want you to remember. I really just want everyone to remember that a private key is something you don't ever share or give to anyone, no matter what. I don't care how good the email looks. This is something that you need to protect. Just like you would protect the key to your safety deposit box, you need to protect that key in crypto. And so when you create a digital wallet, you're going to get a private key and a public key. Don't ever give anyone the private key. It unlocks the rights for its owners. If you lose it or forget it, it's equal to losing your crypto assets. And so the way I had it explained to me is that, let's say you have a locker, okay? And inside that locker is the blockchain. And on the blockchain is your digital wallet. The only way that someone can open that locker is if they have your private key. So if you don't give them the private key, because actually everything exists on the blockchain, even when I was talking about the hardware wallets and things like that, it's just a hardware device, right? It just looks like a USB device. So the money is not actually on the device, it lives on the blockchain. And so that's why it's super, super important. Don't ever give that key to anybody. You know, some of these companies some of these scams got really good to where it looks super real, like Coinbase is requesting me to reset my password and all that. Don't ever fall for that. Don't ever put your private keys in. Get someone who knows crypto to help you, or to get advice from or whatnot. But don't ever put your private keys anywhere. Matter of fact, don't ever take a picture of it. And I'm not saying this to scare you. I'm just trying to tell people to learn the right way. It's best to write it down on paper, make copies of it, send it to family members, have a backup plan. Start thinking about those type of things, because kind of is the reality, right? We don't want that to exist on the internet. And then the opposite is the public key. So this allows crypto users to receive that cryptocurrency using that wallet. Public keys are okay to share. So this is the address you actually share when you're trying to send crypto to, or trying to receive crypto from other people. All right, so altcoin and project reviews. I'll kind of go through this section a little faster. Altcoins are basically anything that's not Bitcoin. There's different categories. We have privacy coins, we have exchange coins, we have stable coins, utility, DeFi, NFTs. There's so many, so hard to keep up with. I don't know, there's over 3,000 of them, if not way more than that by now. So there's a ton. I know my favorite resource for looking at projects and coins and looking at charts and looking at what markets it's supported in, meaning what exchange is this coin going to be on if you wanted to buy it. CoinGecko is my #1 resource that I use. I use this over anything else. I use it every day. So if you're not familiar with coingecko.com, it's super, super great. Highly recommend it. And so when I look at different projects and research, remember I said there's tons of coins. There's so many to know. Like, what do you invest in? You probably see all these posts in the group. How do you know what's good or bad? I mean, it's really important you do your own research for sure. But I look at the 4 T's. At least that's a good starting place for new people. You want to look at the team, look at the partnerships, look at their LinkedIn, look at their Telegram, look at their community. Then I look at technology. So for technology, I'll look at what is the value that they provide versus their competitor. What is their problem that they're trying to solve? What is their use case? I know for me, I only want to really long-term hold projects and things that can change the world. Ultimately, if it doesn't have a big use case, it doesn't really move me and I don't really want to invest in it. There's so many projects out there, so many that I like and believe in, but until you really understand what is it actually doing and are they making progress, are they hitting their targets, that's what gets you excited about crypto. Of course, if you make some money along the way, but ultimately is to really figure out these projects are doing some big things in the world, and so to be a part of that and to learn about it and to know how to research it, really, really becomes important. The tokenomics is also important. Like I said, that white paper, start off with a white paper. Every project has a white paper, just like Bitcoin. So that's a really good start into a project before you invest. Look at the market cap, look at the different cycles, look at price movement. And then the last part I have is timing. And so this is timing of the project. So like how far are they in the roadmap? and then also timing for you to invest in it. So, is it a new coin? Is it something new that they're doing in the NFT space? I mean, obviously we know that the ones that started off early on are doing well. So just look at the different aspects, before you invest anything into any project. And so I have my little DYOR, which means do your own research. So yeah, this is definitely recommended to look into a ton of different things before you just go put money in. Don't ever really go off of what other people say. I see so many people get hurt in crypto, not really knowing what they invested in, or it's all these meme coins and scams and rug pulls. And it's hard whenever you see a community of people like our group, and we really trying to, we're trying so hard to educate them and get good information and to teach everyone how to research and what to look at. For them to not really do due diligence and get hurt, invest in something and then it goes away tomorrow. That's the last thing we want to see. So yeah, super important. And then the last slide I have before we go to trading basics is what are NFTs? Just simple terms. It stands for non-fungible tokens. It has unique properties. This exists on the blockchain. So just think of digital art, GIFs, tweets, virtual trading cards, music. All of these things are being monetized, but it's all on the blockchain. So there's a huge market out there right now for NFTs. Like I said, everything can be verified on the blockchain that you actually own it. So a lot of collectors are really into it. And there's a huge space for that right now. And then DeFi is the other hot thing. It's decentralized exchanges, money, figuring out ways to decentralize money markets, eliminate that peer-to-peer. And it aims to replace that central financial service. So also the DeFi Summit, I think is coming up in like 2 weeks. I made a post today. They have a huge panel of almost every big project doing something in DeFi. I think it's free to anybody in the group. That DeFi Summit is coming up. So I think it's DeFiSummit.com if you want to register for that. All right, well, I'm going to take a quick little breather and just open it up. Anybody has questions? I probably have about 20 minutes left of content to go over for trading basics, which will get you geared up for Gladys's session on Thursday. But before I do that, just kind of want to open it up. Anybody has any questions or anything I covered so far, or maybe something you're not sure of, feel free to unmute or ask in the chat. All right, got a quiet crew. No worries. If y'all have questions later that pop up, you can always ask it in the group, and maybe we'll start a thread with a bunch of questions that a lot of new people have, and we'll get back to you and answer them as quick as we can. All right, so this section I get really excited about, just because I do like crypto trading. It is a learning curve for a lot of people. Not everyone who gets into cryptocurrency wants to learn how to trade. But it's kind of important to understand some of these key concepts whenever you do get involved in trading or even investing. So we'll talk through some of those things. And then at the end of this, I'll show you my website, show you a few resources I suggest you go to. And then we'll close it off and maybe have a Q&A session right before. And then that'll be about it. All right, so this is crypto trading basics. The first thing to understand is the money flow in crypto. And so it's, to kind of see it evolve over time and to know like, where does money come from? Well, how does it trickle? What is considered an altcoin market? All these terms that you may hear about. And so just know it usually starts with fiat, right? So this is your currency in your country. From there, it'll usually trickle into Bitcoin, typically. So of course, this is the world's most noticeable one. It's the most popular. A lot of the trading pairs are paired to Bitcoin, which is why it's influenced by Bitcoin. And then from there, it'll go into large cap coins. So this is market caps when I say caps. So large market caps. So that's like Ethereum, Litecoin, Doge now. Anything really in the top 10 is going to be a large cap coin. And then you'll see the money start to trickle into mid caps. So a lot of these are going to be projects that are built on top of oracles or on top of protocol layers. So, you may have something like Matic, or you may have something that's built on top of Ethereum like Uniswap or PancakeSwap or, on Binance. So there's just kind of the lingo. And so that's kind of how the money starts to flow. And then obviously the last one I have here is low cap coins. So these are going to be your super high risk, but high reward coins. a lot of these is based on speculation. And so just know if you ever put or make money into low cap coins, it is a lot more risky than going with just Bitcoin and Ethereum, you know. So a lot of that money, when people do make money on those low caps, because it is high risk, usually trickle back up. You know, they'll usually cash out part of their position and put it back into fiat or maybe Bitcoin or some of the longer term projects. So typically that's how the market usually works in crypto. And so when I talk about investing versus trading, I kind of wanted to point out a few differences. You know, not everyone who gets into crypto wants to be a trader, and that's perfectly fine. A lot of them, actually, majority just want to invest. And so the way to kind of see the difference is that with investing, it's long term, with trading, it's short term. With the frequency, right? So investing is not going to require as much time. So you may just kind of get educated about a certain project, or maybe even about Bitcoin, want to just invest some in it. You know, you want to maybe do that off of a dollar cost average basis, which is super recommended. I know a lot of people, since Bitcoin's existence, if you just dollar cost average, I think over the course of 8 or 9 years, it would have produced around 200% APY. This is just doing nothing but dollar cost averaging, not worrying about timing the market. Where's the top? Where's the bottom? You know, if you go to dcabtc.com, you can actually plug in some numbers and you can kind of see if you would have put 50 bucks, let's say, over the course of a month, you know, for the last 5 years, you would have only invested maybe 6,000, but that would have been worth like 60, you know, so really cool to see that. For majority, a dollar cost average is probably suitable for most people. But when it comes to trading, that does require more frequent transactions, such as buying and selling. Obviously, the goal with trading is to generate returns that outperform you just buying and holding it. But your risk profile does change. So with investing, you have a lot less risk. With trading, it's a lot more risk. Investing is more fundamental analysis, and trading is more technical analysis. So I'll explain that in a second, you know, as we kind of look at what the differences are. All right, so why trade? I just say don't trade for the wrong reasons. If you think trading's easy money, that's wrong. If you think it's for entertainment, that's wrong. It's not really, you know, made to be a hobby. There's a lot of financial risk. There's a lot of odds stacked up against you. It's really important you know where to start. And then if you want to trade on ego, that's wrong as well. So if you're trying to trade just to say, you know, I'm so smart, or I'm the best, you know, expert trader in the world, you know, that's kind of when it gets scary. Because trading really is hard to master. There's a lot of great traders. I know Gladys is on here. She's an excellent trader. But it's a skill set. You know, you have to learn, you have to control your emotions. There's a lot that goes into it, which is why a lot of people don't do it successfully. Here's the different types of analysis. Just in simple terms, technical analysis is more of the indicators, the charting lines, the patterns. It looks at a market's history and it tries to predict what's going to happen in the future, right? And so technical analysis looks at 3 different factors. History tends to repeat itself, the market discounts everything, and that price moves in trends. And so to really simplify technical analysis, it's really looking at the supply and demand and what is the best way to anticipate that trend. But fundamental analysis, that's more predicting the price movement based on economics, on politics, on news. I mean, look at the news right now with Elon Musk. I'm sure most of us are aware that, you know, the tweet that he did like literally impact the whole market within a few days. You know, that's pretty significant, and it's sad that it can be manipulated like that. But at the same time, that's part of doing fundamental analysis. And when you do risk management as a trader, to realize what type of impact that could have on the market, you know, so that's a perfect example of fundamental analysis and preparing when you go into trades, how stuff like that can happen. You know, we at $44,000 Bitcoin whenever it was close to 60 a few weeks ago. So there's a lot of different players, a lot of big people with money that can influence it, which is why I tell people too, before you get into crypto, understand what you invested in, know how it's volatile, understand that it could be at 60 one day and 40 2 weeks later. You know, it's just part of cryptocurrency. It's part of your knowledge. It's part of you kind of eliminating some of those fears. But I hate when people have expectations that, they're just going to get into cryptocurrency or the market and it's just going to shoot straight up. Everything that goes up is going to come back down eventually. So you just kind of have to know what you're getting into and what type of investments you want to put your money in, which is why I hope, this presentation helps out. And then the last part is sentimental analysis. This is just subjective. A lot of people, and I know when I trade, I actually look at a combination of all three. Some people just do TA, some people just do fundamentals. It just kind of depends on your trading style, but just kind of wanted to introduce the 3 different types of analysis that's used in crypto. All right, so types of traders. When you look at the type, it's really referring to the time frame or the holding period. So position traders usually hold trades from a month to a year. Swing traders usually from days to weeks. Scalpers is going to be usually for seconds to minutes, so they're not going to have any overnight positions. And then a day trader usually only holds a position throughout the day, and so they don't usually hold it overnight as well. So when you kind of hear about all these trading lingo, it really just means the time that a person's going to be holding that trade. That kind of dictates it. So I think for me as a trader, I kind of fit in between a day trader and a swing trader. It just kind of depends on what my strategy is for that specific project or coin. So it can change. You can have different trading strategies that revolve around different time frames too. All right, so the next part is Bitcoin dominance. And I'm not going to spend a lot of time. I have 2 really good slides that's going to be a good resource if anyone's interested in trading. Like I said, I'll have my slide deck where you can go pull up my little cheat sheet for trading. But just understanding the dominance that Bitcoin or the relationship that Bitcoin and altcoins have is really, really important. Even as even if you're not a trader, but mostly if you are a trader, the dominance measures Bitcoin's popularity compared to other cryptocurrencies. So when you hear about altcoin season or you hear about things getting impacted because Bitcoin dominance is either high or low, it really makes a difference in the way you're going to actually take some trades. So what I mean by that is this is a little cheat sheet chart. I won't really spend time going through every single thing, but just kind of, if you've been in the market for a little while, if you've been in crypto a while and you saw Bitcoin drop really fast or go up really fast, usually the same or the thing that says on this slide happens with the altcoins. If Bitcoin goes up really fast, altcoins suffer. If Bitcoin goes down really fast, mostly all the altcoins suffer. So it's just a cool concept to understand. I know whenever I started trading, I had this printed out on my screen, looked at it a lot, took notes on it, kind of understood it. This one's also great as well. This one incorporates Bitcoin dominance. This was something that was found on TradingView. So like I said, if you want to come back and reference this, if you're getting into trading or if you're new to trading, it's really good to understand what happens when Bitcoin dominance is high or low. All right, trading pairs. So these are just some key. So the next few slides are going to be like trading basics. So kind of more terminology based to help prepare you to maybe get into learn more about it. The first thing is trading pairs. So this describes the asset pair being traded. So it's valued in terms of a base pair. So let's look at Ethereum / Bitcoin. Bitcoin is the base pair. So that means you can buy Ethereum with Bitcoin or you can sell Ethereum for Bitcoin. And then the next example, Bitcoin / USD. So US dollars is the base pair, but with my US dollars, I can buy Bitcoin, or with my Bitcoin, I can sell back to US dollars. So when you kind of get to that step 2, remember when I told you about step 2 in exchanging, and if you're getting into trading, you have to understand what different coins are paired with what. Some coins only are paired to US dollar Tether. Some coins are only paired to BNB, which is Binance. So you have to really know what you wanted to trade and what you wanted to get out of it, but understand the lingo of what a base pair is and how to go back and forward, back and forth. It's kind of a hard concept to understand, but once you get into the market or get into an exchange and start doing some paper trading, it'll make a little bit more sense. Here's just a knowledge check. If you want to buy Bitcoin, if you want to buy Litecoin with your Bitcoin, what trading pair would you select? So y'all just think about that for a second. Would it be A, B, or C? And so obviously it'll be B, so that means that you have Bitcoin, but you want to buy Litecoin. So my base pair is Bitcoin. I'm going to buy Litecoin with it. But let's say I want to sell my Litecoin, then I may sell it back to Bitcoin. So that's in essence how it works. All right, so next we have time frame. So a time frame on a chart is going to be your most basic element. Time frames can range from 1 second to 1 month. I just kind of did a snip of my chart right here. But for every candle that you have, or whatever time frame you in, every candle that you see, and we'll actually go into candlesticks in a second, but every candle you see represents that time frame. So on my chart right now, I'm in the 15-minute time frame, and I can see that because I have this right here on 15 minutes. Every single candle you see is going to be 15-minute candles. And so whenever new people, a lot of times they'll ask me, where do I start with time frames? I know the most popular for beginners is to use the 1 hour and 4 hour, maybe even the 1 day chart. I trade mostly on the 15-minute chart, but it just depends on your strategy. It depends, once again, what are you looking for in the market? How long do you plan to hold these trades? There's so many factors that come in, but just understanding that you can change the time frames and that each candle represents that time frame that's selected. That's the best advice I can say to start off. So when you look at a candlestick is going to represent that price activity during that time frame that we just talked about. This is going to be used to describe the high, the low, the opening, and the closing price movements. And it resembles the shape of a candlestick, which is why it's called candlesticks. You can see here I have the body. So like on the green part, anything that's in the middle is considered the body of the candlestick. And then anytime you see it go up or down like this, that's called a shadow. It's also known as a wick or a tail. But these long lines above and below it basically dictate that it actually went to that part in time or in that time frame, but it actually closed a little bit lower. So understanding candlesticks, I know when I first started trading Forex a few years back, that's kind of what got me into it. Studied it for a while. I read a few books. I mean, if this is something you're interested in, or even understanding the basics of it, it can really help you, obviously, with trading. Because like I said before, this is using technical analysis. You're trying to read, it's trying to tell you something. Some of the qualities of a candlestick, these are full of information, right? It helps indicate market psychology. It helps you look at the emotions of buyers and sellers. It represents a trading pattern over a short period of time. And obviously, anytime you pull up a chart, you want to have historical data. So a new trading pair that just came out, it may not be beneficial for you to look at that. You want to have some data. You want to see some candles. You want to see a trend or what type of trends evolving. And I know Gladys will spend a ton more time on different patterns and things like that. But just for you guys to understand what the basics of a candle looks like and what does it mean when it opens and closes. And so if this is new to you, and you're interested in this, there's going to be some chart terminals that I'll recommend in a second for you to be able to start putting some charts, on your screen and start looking at it. The next thing I want to talk about is shorts, trading shorts and longs. I'll kind of go a little bit faster, but the short entry, you basically can make money by selling. So meaning you feel or you expect the value to decrease. That's what a short's called. And then a long trade is going to be that you expect the value to, oh, I think I have a typo. Yep, I sure do. A long trade, you expect the value to increase. So my long entry would be here, and then I would expect the value to increase. This is incorrect, so I need to fix that. But that's basically the difference between a long and a short. Some other key concepts is entry, stop loss, and take profit. So an entry is self-explanatory. This is going to be where you want to enter into a trade. So let's say I'm doing a long trade, and my entry point may be here where I'm hovering on this arrow because I'm expecting it to go up, right? So my take profit is going to be higher because let's say I bought Bitcoin at 44,000 today and my take profits maybe at 50,000. That's what the take profit means. Now the stop loss is super important. This is going to be your safety net, okay? So your stop loss is going to be where you want to cut your losses. The trade completely went against you. This is where you can actually execute that sell if that's your strategy. For me, whether you use stop losses or whether I use a dollar cost average strategy, that depends on your trading style. And so I know people do it different ways. But if you're not using a DCA strategy, you probably want to have some stop losses set because we know in the crypto market, it's very volatile. It can go up and down very, very quickly. Just going to skip this one. And we're almost done with this piece. Trading terms. So you have different order types. A limit order, you can buy and sell at a specific or a specified price or better. I typically use limit orders. The only thing with limit orders I want to say is that, let's say you have a certain price you want to buy Bitcoin at. Let's say right now it's 44,000, but I really want to buy it if it goes to 43,000. I can set a limit order, but just know that if the market don't actually go to 43,000, that trade will not execute. So that's the thing about limit orders, or maybe it's going to partially fill, so limit orders, you may not guarantee that it gets filled, but you don't actually have to monitor the chart and whatnot. A market order is going to instantly execute at the best available buy or sell price. So market orders don't let you choose the price. It's whatever the market's at. Obviously, you have to look at a little bit of slippage, and there's a few other factors when you deal with market orders. Typically, you pay higher fees as well whenever you make trades on market order. So just some basic key concepts to understand the difference between a limit and a market order. Paper trading, like I said, I'll post this slideshow later, but any of you guys or ladies, should I say, interested in paper trading, TradingView has a great terminal. I know 3 Commas has some great tools for trading or paper trading. You can actually do it manually on a piece of paper, but I just want to show you, this one is easy. I think if you get a free account on TradingView, you can activate paper trading. You can actually play with $100,000 of fake money. You can execute trades. You can see where you would take it, get used to trading in the market. So anyway, a really cool feature. I think it comes with you signing up, and I think it's free. So here's just the steps to be able to activate that. All right, trading hierarchy. This is kind of my favorite, most important slide. Anybody who's in trading probably knows that patience and emotions is definitely critical. It's the most important thing. And so you really have to know, how do you protect your emotional capital? You don't have to, you don't wait on trades. You let the market decide what you're going to do next. You don't actually, jump the gun. You don't FOMO in. You avoid revenge trading. And so this whole mindset you have to have as a trader, you kind of have to learn over time, or you have to adapt the skills or know what you're getting into whenever you want to start trading crypto. There's a lot of emotions that go in. I even see posts in the group, people are like, oh my God, I can't take it. The market dipped 20%, but when you've been into this a long time, or you understand what the market's doing or why it's doing it, for me, it's just a buying opportunity, so everybody's at different levels. And so if you're not quite there, if you need to understand why the market's doing it, eliminate that fear. If you are worried, that either means you have too much money invested, or maybe you're not educated enough to be able to understand what's happening, and so I try to educate people to let them know, like, if for some reason the market moves down 20% and you don't understand why, it's important that you really, really understand, why it's doing that. That way you can make a better decision as an investor. Then the next important component of it is risk management, looking at the position size, looking at, managing the trades that you have, not going into too many trades, and wiping out your whole stash, of crypto, which when I started trading early on, I learned the hard way. I learned some hard lessons, but you have to understand that you should only be going into some of these trades with a small percentage of your portfolio. And on top of that, it's really good practice to not trade with everything you have in crypto. They called it a whole bag or a hodl bag. That's really going to help you long term. What we're doing here and a lot of these tradings and trades and stuff like that is to really help you gain that advantage over holding long term. But at the same time, you have to know how to protect your capital. Enter in the overall trend. Right now, the overall trend's still bullish. We're still going up. I understand the market took a dip, but like I said, overall, I feel pretty bullish in the next few months or so. And then you look at analysis, where's your entries going to be? What's your exit plan? What's the market selection? What type of coins you want to get into? There's so many components of it. It's just figuring out this little piece of the puzzle. But just always remembering that your emotions and the psychology is the most important thing in trading. All right, and then what are some essentials? So just a few things I want to talk about. Obviously, the crypto market is open 24/7. Just because the crypto market don't sleep, don't mean you don't need to sleep. You need to have balance. You need to understand, what the market does, what times it's usually influenced at certain different countries and things opening up. You have to have the right mindset. You can use different trading analysis. Like I said, pay attention to the news, like we just talked about Elon Musk's tweet and how that impacted the market. You can use indicators. So I'll kind of touch on a few in a second. Trading platforms, I like 3 commas, but as far as looking at my charting tools and my charting terminals, I usually use Aurochs, which I'll have a link for in a second. That's a great project that I've been following for a few years that has a free web-based charting tool where you can put in your indicators and things there. And I also still use TradingView. So I've been using TradingView a few years as well. Another great one that's also free. And I know Gladys said we'll put in the link in a second, or she just shared something for everyone. It's perfect. If you're interested in trading, or if you're watching the recording of this session, you know, we'll post a link on the page as well. But go get a TradingView account and start looking at the paper trading. I think Gladys will explain a little bit more on Thursday about it. But it's good to kind of get the ball rolling and start understanding what the charts look like. What is a candlestick? How do you apply time frames? There's definitely a learning curve to learn that, but once you kind of get in there, I think you know, it makes a lot more sense. And just know it's paper trading, it's fake money. That's the point of it. It's for you to get comfortable with it. And then the last thing is to use alerts. A lot of these programs like Aurochs and TradingView have alerts where if you're looking for something in the market, once you're at that point, you can set alerts to be able to tell you on your phone, you know, whenever something's happening in the market that you usually base a trade off of. You know, so to say I literally trade and watch charts all day is not true. I rarely look at the chart. I look for certain things in the market. I execute a trade. I set alerts, and then I'll go back and sell and look at the market before I want to get out. So it's all about strategy. It's all about figuring out what works for you and kind of what you want out of it. But there's definitely a lot to learn. So just take your time and, you know that we have people here along the way to help. Here's some trading indicators. Like I said, I'm not going to spend a ton of time on it, but these are just common ones that I heard of being used in the market. RSI, MACD, Bollinger Bands, and Fib is probably the most common ones that most traders in crypto use. So just a ton of information on those things as well, or a combination of it. You know, for Confluence, you can use different indicators to look for certain things in the market as a trader. Here's the trading software I was going to point out for y'all. This is just a quick view of Aurochs. I'll kind of flip through this a little quickly. Aurochs does include a free indicator right now for anybody that signs up. It is free to get Aurochs. It's a web-based thing. You don't have to download software. You can apply any pair. They even have like Uniswap pairs and things as well, where you can look at DeFi pairs, which is really cool. I haven't been able to come across anything else that supported that yet. But you can apply their indicator and it's pretty darn accurate. I know I use it every day when I trade. So anyway, I'm a huge fan of Aurochs along with TradingView as well, but I mainly use Aurochs whenever I do my trading. And then 3 commas, I'll just kind of skip over this just for the sake of time. And that takes me to my practical tips. And then I'll show you guys my website. And then we'll kind of close it out with a few questions and we'll go from there. So just in general, if you're new to crypto or if you've been in it a while, I give these practical tips to most people that I educate. Super important, first of all, to understand the basics of cryptocurrency, blockchain, and Bitcoin. Read or listen to that white paper. I'm telling you, it's going to make a lot more sense. It's bigger than just an investment opportunity whenever you read this white paper. Know that you can buy a fraction of a crypto. This is kind of the biggest myth that I see people come up to me and say, oh, well, there's this coin called ADA or Doge, and it's so much cheaper than Bitcoin, so I'm going to buy, you know, X amount into that coin. You know, and that's completely the wrong way to think about it. You have to understand the technology, like I said, know what you're getting into, know that the market cap really influences the price of why that coin's so cheap compared to Bitcoin. But just with Bitcoin in general, you can buy a fraction of it. You can buy $10 worth of a Bitcoin, which might be like 0.0001 of a Bitcoin, but you still can accumulate that, right? So that's really an important concept that new people don't really understand coming on to crypto. Also know crypto is risky. Invest what you're willing to lose. Once again, make sure you can explain it to your grandma. And I tell people, only invest your knowledge level at that time. So if you know a little bit, you should only be investing a little bit. Do your own research. Watch out for scams. You ladies do a great job helping us in the group. Anytime there's something that looks scammy, I mean, it's really hard to monitor, that many people at one time. So please help us out, report it. Our moderators are incredible on the, in the group. They help me all the time as well. So anytime something looks a little fishy, or if people are messaging you from within the group and you can see they're an active member of the group, please let us know so we can take care of it. First time transfers, send a small amount, confirm, then send the rest. If not actively trading, do not keep any of your crypto on the exchange. This is just best advice. Obviously stored in a hardware wallet. If you're not actively using it or trading it, there's no need for it to sit on an exchange. So I know I've been involved in an exchange called Cryptopia that completely disappeared with my crypto. So you learn the hard way. I wasn't even actively trading it. I wish I would have got it off. But like I said, that's best practice right now. Never disclose your private keys to anyone. And then my little last number 10 is just hold long term. This is a long-term game. Crypto, like I said, once you understand the technology and what's behind it and how that shift is happening, you kind of start to get more confidence and you start to understand the market and why it moves the way it does. So that's kind of like my little practical tip section. The next thing I'll show you guys, I'll show you my website in a second. I'll post the link. Let me actually get out of this. Before I do that though, just where to start. So I have a few little starting spots. Of course, my website, I have a ton of resources. I think that'll be a good place. I have the whole slide deck posted on my website. So I have that link as well. And then News Crypto is actually one of the companies I'm helping revamp their educational platform. They're out of Slovenia, but we are doing a lot of education. They have free education for people, which is what I love. People can come onto the platform, sign up, and you can get free content. And we currently revamping a lot of it. So in a few months, it'll be a lot more robust. So I just think it's a good place to get concise information, from a source that everybody can benefit from. So anyway, without further ado, let me just pull up my website so y'all. So if you go to cryptomagnet.io/learn, you'll be able to see the slide deck location. So under Crypto Coin Trader Women's, this is the presentation from 5/17/21. So all you have to do is click on that and it will bring up the slide deck. In addition to that, if you want to see more about my website, this is still currently in development, but it's cryptomagnet.io. The whole goal is to have a resource hub of many of the different resources that I use or find beneficial in crypto. So I did section it off into different sections. So feel free to come browse around. If you have any questions or maybe you have any ideas for any other good websites, please let me know. Currently, like I said, still trying to build this website out. So yeah, would love some feedback as well. But just kind of before I open it up for questions, just want to thank all of you ladies for being here. Hopefully it was helpful for everybody. I really wanted to target the beginner group. I wanted to introduce everyone to trading. There's so much that's involved in it, but I know I have Gladys here, who's an awesome moderator. She'll be doing a technical analysis for beginners on Thursday at the same time, right, Gladys? Same time, same place. We can't hear you.
Yes, correct.
Okay.
That's right.
Awesome.
I was
awesome.
muted.
So good. Yeah. So anybody who's interested in trading, or maybe if you're not sure if you're interested, tune into that. It's also going to be recorded. We'll make sure we post that in the group after, so that way people can play it back. But Gladys, I don't know, how long have you been trading for? Maybe you can give us a quick little ease into the course of what to expect on Thursday.
All right. Well, first of all, I would like to thank Chelsea for this wonderful breakdown of Crypto 101. Like, I know a lot about crypto, but listening to this is really refreshing, and it's a really great reminder why you believe in this space in blockchain. And thank you everybody for spending this time with us. And yes, to answer your question, I started trading in 2015, but not knowing anything, obviously. I did stock market and then penny stocks, marijuana stocks during the bubble, and then crypto 2016, because crypto 24 hours, that literally schooled me. So that's when I got interested in technical analysis. So I do love the blockchain, I do love the technology, but I love reading charts, and that's something that I like to do. So early on, we have Joe Blackburn and Todd Blackburn and Rev Neeson. I don't know if you guys know these guys, but they're very, very big on technical analysis. So they were basically our teachers back then, and they really pushed us to learn and read charts. So I just carried on that tradition for the crypto coin trader. And I was asked to become one of the moderators in 2017 and then up to now. So now I think it's a great time to give back. All these years I've been studying and polishing my technical skills, and I'm now ready to give back to everybody in this community.
Awesome. Awesome. I know I'm excited. I can always brush up on some TA skills. And, you know, while I know I'm not the expert trader anywhere close to it, I definitely feel like I can benefit, you know, from learning from you. And I think just even offering this in the community, you know, this is not something we've done a lot of, but, you know, give us some feedback. Do y'all like doing stuff like this? Maybe we can use StreamYard eventually. We want you guys to feel secure in the space, you know, in the group. We want everyone to ask questions. We want people to get engaged. I mean, honestly, I told Gladys the other day, like, we getting over 150 people request a day to come into the group. A lot of them are new, but honestly, when you see the quality of people that we actually have in the group, it's exciting it's refreshing to see. Like, it's mostly valid posts. It's not much scams. You know, there's a lot of really smart women, a lot of big influencers, a lot of great developers, women that I know that are like big at the top in all these blockchain projects and stuff, and they're in the group, you know, so make some connections. You know, I encourage people, get your questions answered. You know, if you like stuff like this, or maybe you have an idea, feel free to let me or Gladys or any one of the other moderators know as well. You know, we're here to make it a better place for us. So if you're a guy and you want to be involved in Crypto Coin Trader, we do have a larger group, which is like 140,000 people. That one's out there, but this is really our space, you know, so just kind of wanted to say that too.
I just want to add to that. So we have the crypto coin trader, then the crypto coin trader for women, and we also have the 51% crypto coin trader technical analysis group.
Yeah.
Now that one is when you post your chart and you have all these crypto traders, they just like go at it, you know, they tell you what's wrong with your chart, but it's a good thing for you, you know, when you're ready, and then that's when you post your chart. So it's a really good education. So even if you're starting or you're a beginner, I recommend to you guys to join that group and check it out, because you will definitely learn a lot of technical analysis.
Awesome. Thank you. Thank you. And what we'll do is we'll share after this, Gladys, if you can get that link, we'll drop it in the group chat. That way everybody can get everything. So yeah, I think we'll just wrap it up. Does anybody have any questions? We'll open it up for a few minutes. I know I have probably about 5 or so minutes.